Joining us now, Kevin Book, Clearview Energy Partners Managing Director and co-founder. What do you think the president needs to do?
Well, there's the school of thought, Guy, that doing nothing will be the right answer because in the end, the market sorts itself out. That's certainly the line that OPEC has taken. It's also the line that the EIA and the IEA have taken in their outlooks at the cyclical turn coming in winter. But having said that there's something that needs to be done, it's going to be very hard for any elected leader to do nothing. And so we still think that if there's a likely option, it's most likely to be a strategic petroleum reserve draw.
How quickly and how soon does that have to come to make a material difference?
Well, the announcement of the draw probably makes a difference in the market immediately. The expectation of it may already be pricing in. There's been a certain amount of jawboning going on even since August. Speculative long interest looked like it responded when Energy Secretary Jennifer Granholm mentioned a ban on oil exports. That was October 6th. And there's been a decline in long interest since then. I think if you look ahead, the real question is whether the SPR draw would be enough to tide prices over until the cyclical turn. And of course, then there's the possibility that the cyclical turn doesn't happen. What would you do next? But moving quickly, relatively soon, ahead of the holiday season, probably would be the right time frame, politically speaking, if not economically.
Kevin, the president is going to be speaking to Xi Jinping a little bit later on, the Chinese leader. He hasn't yet picked up the phone and spoken to the Crown Prince of Saudi Arabia. Hasn't happened yet. We've been talking to a number of people that suggest that if he were to do so and normalize relations, then the Saudis might be a little bit more pliant on the president's wishes to get energy prices down. Is this about politics? Is this about international relations more than anything else?
Well, there's always more than oil going on in oil markets, Guy, as you well know. And in this particular case, personal diplomacy probably could go a little further than it might otherwise. But there are constraints. The OPEC Plus deal is carefully architected. Deviating from the plan could create internal rifts. It wasn't so very long ago that we remember when the members of the group and the expanded membership of OPEC Plus weren't all marching in the same direction, March 2020. And so breaking the deal unilaterally because of a conversation with the president, probably not in anyone's interest, even the kingdom. But doing it on their own terms when they meet formally in December, maybe.
What I'm having a hard time understanding, Kevin, is the urgency behind it, whether it's coming from politicians or President Biden, just the rhetoric. I mean, I understand that this is going to hurt for certain individuals, but the national average is still $3.40 a gallon. Where is the real pain? Why is this such a pressing conversation right now?
You know, speed is always the issue. The price itself almost never is. To some degree, if you look at the disposable income share that's going to gasoline, it's well below where it was in the prior decade average and even a few years back. Disposable incomes are up a little because wallets have been padded by savings and stimulus. But tell that to the marginal voter or the marginal consumer. The urgency, again, may not be economic in nature, but more political. If you took a drubbing in Virginia, what would look like it was going to be a blue state for a while, a couple of Tuesdays ago, you're probably thinking this coming Tuesday about what you might want to do. So there are needs that are economic in nature, and I think you're very right to couch this in terms of history and comparables. But when something happens fast, it becomes an emotional issue. People buy gasoline before they use it, and they feel it in their wallet right away.
What happens if an SPR release doesn't work? What else is in the toolbox?
Well, the toolbox is actually pretty limited in terms of good ideas. The SPR there's many different flavors of the SPR. There's 18 million barrels that Congress asked the Department of Energy to sell. They could go ahead and decide to do so earlier than maybe expected. That could happen, and then leave another 30 million barrels for non-emergency sales at the president's wish as he wanted to go forward. There are some downsides. Putting oil on the market, deterring the investment thesis for domestic producers who are slow to come back. The administration keeps talking about using the Federal Trade Commission to investigate market manipulation and price gouging. Past investigations have yielded very little. It's unlikely to produce much. Export bans could have some significant consequences, deterring production in the U.S. in the long run, and probably driving up global prices more than bringing them down. So the jawbone and the continued investment at the upstream, one aspect available to the president is regulatory leniency. That one becomes politically difficult from the left, showing the willingness to be flexible on fossil fuels. It's already happening. We were expecting a big report in federal lands leasing reform, hasn't come out yet. But I don't think you can expect the president immediately post-Glasgow to turn his back on his green agenda.
Yeah, that's such a great point, because I feel like the timing in some ways could not have been worse for this energy crisis that we're experiencing. Vicki Hollub is the CEO of Occidental, and she was talking at ADIPEC also, and she said, and I'm quoting here, "If I was to make a call, I'd make a local call first. I wouldn't make a long-distance call." Why can't President Biden make a short-distance call?
Well, he absolutely can. In fact, it's even shorter distance. It's a local call over to the EPA or to the Bureau of Land Management. The problems are mostly the calls that he'll receive after he's done. Look, 80% of the growth in global demand was supplied by U.S. wells in the decade through 2019. The U.S. is a prolific production zone. As Scott Sheffield mentioned, investors are a little bit less enthusiastic about being that prolific. But at the margin, you can induce production by providing regulatory flexibility, by signaling ongoing flexibility. The problem is that those signals run counter to other signals that the Biden administration wants to send, not just to political constituents, but also to clean energy investment. And so it's not as easy as just making one call. There's going to be a lot of other calls that would have to follow it.
US coal prices are at their highest level since 2009. Does that just tell you everything you need to know here about the situation? We're trying to pull every lever. We're trying to make sure the lights stay on. Oil production in the United States is limited for a number of different reasons. The US energy infrastructure, the grid, is reaching for coal right now. What does that tell you about where we are?
Guy, it tells us a couple of very important things. The first is that plants that are still connected to the grid are going to run when the price is right. When the spark spread inverts and suddenly there's an incentive to burn coal, it's going to burn. So gas prices were incredibly low for so long, largely because gas came out as a consequence of oil production. Think of that as one of the consequences of drilling that maybe you don't want to stop immediately. And the second thing is that this is really the problem that industrial economies are facing. You can go to Glasgow and have best intentions, but when 24% of your power is coming from coal, you can't say that you're going to phase it out immediately, certainly not at a time when prices are high. Maybe at a lower gas price, more leniency in the market, there might be more room for politicians to navigate.